Hey gang, this is Mike with Mr. No Fluff. This is Alchemy. What's going on, Mr. Nexo? Thanks for joining in. I want to talk about the economy collapse news. This is not a doom and gloom story. This is a great opportunity, the most best opportunity since 1930 is upon us, okay? And I want to talk about a company that I had a relationship with because in the last crash, I took over two homeowners' mortgages that was with Ditech. And at the same time, my office for my moving company was right adjacent to Ditech. So I got to interact with the company and seeing them and since I took over two mortgages that were Ditech mortgages, I want to share this with you because I really was like right across of them at their offices where my office was. And Ditech used to be MedLife. It's part of an insurance company that diversified and got into lending mortgages, and all they lend on is home mortgages. In the last crash, around 2006, they had roughly about 800 employees. Today, they have about 70 employees. So again, they lost 90% of all their employees in the best market ever. Okay, why do I say it's the best market ever? Because if you look at NBC, CNN, all these people say the market is really good, jobs are high, we're creating a lot of jobs and money, but it's baloney because Ditech or MedLife, after they changed their name, only majors in mortgage loans. And then the last crash, they were not like other bankers that went belly up because they made decent investments. Okay, so they didn't go bankrupt in the last crash, but now in 2019, in the hottest market supposedly, okay, they're bellying up. And what I want to bring to you guys' attention is that in the hottest market ever, how can mortgage companies go and be bellying up? Does that mean that real estate is about to pop? Think about what I just said. Ditech used to have 800 people. There were office right by my office. Now they're like 70 people or less at their offices. Okay, they just majored in home mortgages. Now you should ask yourself also that the Fed, the Federal Reserve, try to increase the mortgage interest rate up, and guess what? No one was applying for mortgage loans. So what did it do? They brought it back down. Now interest rates are again lower than they ever were just a couple of weeks ago or a couple of months ago, guys. Okay, so that's a clear sign that our economic system, the people of the society, the corporations of the society, and even Big Brother themselves are fully into debt. They're maxed out. Okay. Now, other things I want to bring to your attention is, for example, PayPal, one of the biggest companies out there, right? Visa. Bunch of different banks are already starting to lay off people in their industries, especially if they are in the mortgage sector. Okay, now it's not like 2006 when hundreds and hundreds are being let go, but they're starting to let these people go. You have to ask yourself, why? Thank you. Why are they doing this?
Here you go.
If interest rates are at all-time low, okay. What does it mean to have all-time low interest rate? I was just talking to a seller just yesterday. The seller has a $550,000 loan. Guess what their monthly payments was? $1,300. $1,300 for a $550,000 home, ladies and gentlemen. Okay, and that includes PITI, which is principal, interest, tax, and insurance. Can you believe that? In 2006, with a $1,300 mortgage payment, you could only buy a house worth $130,000, maybe $150,000. So as you can see, more and more people are getting into these massive amounts of debt because there is no more affordable homes. Now, in 2006, was someone could afford $1,300 on a $150,000 home or $200,000. Now they're able to afford a $500,000 mortgage. Okay, the reason is there's no more affordable homes. People have to get into debt bigger. And the only way they can afford that is because interest rates are all-time high. She's kicking off that. Sorry guys, my kid was kicking off. I didn't want to fall down. We had bicycling all day. Okay, so coming back to the story, what they're telling you on CNN, NBC, New York Times about the economy, when the Real Estate Association comes out there and says, we're only down this much. Just remember that everyone has a vested interest. Okay, now my vested interest that it doesn't matter if the market is up, I know how to make money. If the market is down, that's when really you make your money. Okay, when the market is down, that's when you really make your money, and it's starting to happen. Real estate, that's why I'm back into it. 2006, I said I'm out of the real estate. 2019, I'm back, and we've already started talking to home sellers, and I'm seeing that a lot of them are heavily leveraged out. They've heavily refinanced their homes. They've used their houses like ATMs. It doesn't matter if it's home equity loans, if it's line of credit for their equity, whatever. Okay, and when this thing pops, so many people are going to be motivated. Okay, now this seller that I spoke to you guys about, his parents were sick, so they had to relocate to a different state. But it just blew my mind that they had almost a $600,000 loan, and the payments were only $1,300. And now, I told you guys that subject to heaven is upon us. What does that mean? Well, a house that is worth $500,000 plus $600,000, it's not going to rent for $1,300. Okay, it's going to at least rent for $3,000, and at the very minimum. Do you see how there's such a big spread from the mortgage versus what the rent price is? Oh, you guys, excellent. There's significant spread, and that's why I call it subject to heaven. Why? Because everyone has ultra low interest rates, which makes the monthly payments ultra low, and the rents have gone up and up and up because Federal Reserve keeps printing money, all types of assets, and even average food prices going up. So it's going to create a massive difference between when I buy this seller's house, when I have to pay to his bank $1,300, I can easily rent this house for $3,000 a month. Okay, it's a beautiful home, and think about it. And I'm not talking about in California, the $500,000 home gets you a hood. I'm talking about in a state where prices are cheap. An average home there is $200,000, and you have a $500,000 home, you're going to get more than $1,300 a month. Okay, and you can see the difference is so massive. Okay, so don't believe the hype in the stock market. It's about to tremble. And I've already seen signs. There's massive banks laying off from their mortgage departments. And you can see like Ditech, again, I used to office with them. They used to have 800, I didn't office with them. I had an office right next to them. They used to have 800 employees, and right now they're less than 70 employees, guys. That's 90% reduction, okay? You'll also see the same thing happening in the auto industry, guys. Like the reports that just came out, car auto sales, everyone is down besides Honda, all right? Everyone, from Ford to Chevy to Nissan. Just a couple of weeks ago, I brought you a report that 7 million Americans are behind on their car payments. Guys, people that own cars is how they get to work. That's probably going to be the second last thing they're going to be late on. The last thing is their mortgages. So if they're on their second last thing, which is car payments, the very last thing is their mortgages, which means they're going to be behind on their mortgages. They can't get to a job if they don't have a car. Right? So we're going to have a big tsunami of defaults coming in. We're going to have a big tsunami of bank-owned properties. We're going to have a big tsunami of homeowners that have equity and they're trying to liquidate, so they're willing to let it go. We're going to have people that are going to be upside down because They use their homes as ATMs, and they're not going to be upside down 10, 20,000. You know, like this gentleman that I talked to you about, he has a mortgage of $555,000, $555,000. Well, he's probably going to see significant 30 to 40% reduction in his home property value when it drops. Now, when I buy his house, I'm just going to rent it out. I'm getting $1,300. Well, I got to pay his mortgage company. I could easily rent it for $3,000 plus, okay, easily. So I don't care if the market tanks and I have his house and the house drops 30 or 40%. I'm not going to sell. I'm not here to sell. I'm going to rent it out. You know, because at this time, when the tsunami starts happening in this foreclosures, guess what? Rentals are even going to go up higher. People got to live somewhere. So simply put, there's great opportunities upon us. And if you guys don't know how to talk to motivated sellers, you don't know how to find these deals, how to negotiate, where with no money down or no credit, then you should definitely join my profit sharing coaching at Mr. No Fluff, guys. Now, let's talk about other aspects of the market, guys. We talked about auto sales. Okay. We talked about people are in debt crazy. Okay. Governments, states, cities, corporations. Okay. We talked about that. What do I think, in my opinion, it's not financial advice, what I think the next 3 assets are going to be in the future? Well, real estate, not for a fix and flipper. If you're a buy and hold guy, real estate is going to be the thing for you. Now, not going to a bank, because going to a bank is going to be hard because they're not going to be lending money. Because once everything ceases, there's no money going to be lended, so it's going to be hard. But if you learn how to work direct with homeowners like I do, then that's going to be a great asset as rental. Number 2 thing, I believe in cryptocurrencies like Bitcoin. I think that when the market crashes, it's going to be a worldwide crash. And then people are just going to be tired of this little fiat. They're going to be tired of having $1 million in a banking account, but they're not getting any interest rates. Okay, they're going to be tired of that because back in the 70s, 60s, you had $1 million in a banking account, you'd be living off that.
I'll take
that. Okay? Guys, I'm going to get off. Go ahead and click like. My lunch is here. Then bicycles. I'm pretty hungry. But this is not a gloom and doom story. It's a great opportunity coming from you. If you want to get into real estate, if you want to start a business, there's a lot of, if you want to become an agent, there's a lot of opportunities. But as an agent, you're not going to just be able to sell traditionally. You have to change your strategies because most of these agents are going to be top producers or agents. They're going to soon find themselves a different job because the market's going to tank. Okay, and I can guarantee it. Okay. Not financial advice, but you're going to see a lot of real estate agents are going to get out of the business because people are coming in, everyone's coming in, boom. A lot of them are going to go out. They're going to go become whatever they become, mechanic workers, receptionists, hairstylists, whatever, you name it, ladies and gentlemen. Thanks for watching, guys. Click the like button, share the message. Let me know what state you're in from. I'm really interested in what state you're in. And also, do you have any cryptocurrencies? Peace, guys. Oh, yeah, by the way, we have a flash sale at MrNoFluff.com, 50+% off, thanks to 11,000 subscribers. See you guys.